When it comes to financial technology, or Fintech, Canada is way behind. A new report suggests Canada's banks are to blame and our once celebrated regulatory system. The report from the Munk School of Global Affairs says Toronto's Fintech growth lags other cities that have established hubs like New York and London. For instance, a UK firm first launched peer-to-peer lending in 2004. Our peer-to-peer lender goes live this fall. That makes us 11 years late to the party. The problem is, according to the report, Toronto's banks don't act as true partners to fintech startups like in other cities. As a result, Canada's banks face serious long-term challenges with potential to destabilize the entire sector. Dan Breznitz is co-director of the Innovation Policy Lab at the Munk School of Global Affairs, and he's co-author of this new report. So Dan, could you start by just giving us some examples of fintech that you might find, say, banks in New York and London?
Yeah, for example, the one thing that I think all of our audience knows very well is peer-to-peer. The fact that if you need now a loan, whether you're an individual or a business, what you can do is go to basically a website, say who you are, and within 15 seconds to 50 seconds, you'll get a loan directly from other individuals and or organizations, without having to go to a bank, without having to wait for 3 months to even know whether you can get the loan or not. And on the other side, most of those loans, because of the algorithms, the technology that they use.
So now, your report is saying that part of the problem for Canadian innovation on this front is because of regulations around our banks. Can you explain what is it in the regulations that prevents this type of thing from developing?
Sure. For example, let's go back to peer-to-peer. If you're Canadian and you want to have a Canadian peer-to-peer, you will find that it's impossible. 11 years after people in England could already have it. And the only reason for that is regulation.
I know, but isn't the regulation there to protect consumers?
Of course it is. And I think this is part of what could be our competitive edge. Everybody in the world perceived our regulation as the best in protecting the consumer, especially after the financial crisis.
But you're saying it's too protective, that it's stopping innovation, is that right?
Exactly.
But how? Why? Why can't we move forward?
I think that one thing that we are missing is some channels of communication between the regulators, the many regulators that we have, which is another problem, and the technologists. And what happens in the financial industry. We need to have procedures in which the regulators will know very quickly and in advance what is happening, can judge whether it's useful or not, would allow experimentation, and if those experimentation are deemed to be both good and safe, be quickly scaled up. Now, is there any part of this that relates to the banks perhaps wanting to protect their own market share and perhaps not wanting to engage with some of these more technologically advanced options because they see it can be stealing their lunch? Well, I'm sure some of it is. But even if this is what the banks want to do, and as a matter of fact, if you talk to the CEOs of several of the leading banks in the last 3 or 4 months, they will admit that. It's almost impossible to do it with fintech. You can do it when you know where you'll be attacked. Fintech can attack the banks or banking systems from so many directions. But by the time you figure out how to defend from one direction, it's over. The barbarian basically are at your gate and are past the door.
Now, you're also suggesting that if Canada doesn't get on the bandwagon with this sort of thing, that it could eventually even destabilize our banking system. How do you see that happening?
I don't think it will destabilize the banking system for us as consumers. It will definitely change it. It might not even be Canadian. First of all, most of the banks will lose most of their profits. Most of the things that they do and where they have profits are things that can easily be given using financial technologies. From payment, from electronic transfer, from currency exchange, from basically what we use as credit cards today. And what it turns out to be is that the banks will basically be a very boring utility with low margins of profit.
But you do see some progress in this area. For example, the CIBC has just partnered with a startup in this fintech.
So I'll say that I think that there's many positives with the way the banks are finally dealing with fintech. There's a lot of actions, but, and I think this is the most important thing for Toronto and Ontario and Canada to understand, this is a systemic problem. This is not an individual problem. We can't point at a bank and say, it's your fault, or that bank, it's your fault. And even if a bank then react and do things alone, that will not create what we really need. And what we really need is a fintech ecosystem. It sounds cliche, but our research showed that, united we stand, divided we fall.
All right. Well, thank you so much for being with us today.
You're very welcome. Thank you for inviting me.